Hello, Assalamu alaikum, and welcome to the third edition of Your Property Show. My name's Hasina Momtaz, and I'm a media and communications expert, former advisor to the Mayor of London. I'm also a broadcaster, journalist and TV presenter. With me is Kam Ali, who has an even more extensive portfolio. He is a property investor. He's also the managing director of the District 1 Estates Group, which focuses on property investment and developments. He's also a trained accountant and mortgage advisor. So he's an absolute expert in the field of finance, and that's exactly what we're going to be talking about today. Today's discussion will be on property finance with a focus on buy-to-let properties, but it's a very important show because what we're also going to do is give you an update on all the new tax changes and regulations that will be coming into effect actually from tomorrow. The first changes, the tax changes, coming into effect from the 5th of April, and the stamp duty changes will be coming into effect from the 1st of April tomorrow. So it's a really important show. Please do stay tuned. The most important thing is to call through. If you have any questions around property, around finance, you guys are the most important people, so call through. As I said, Kam is an expert on all matters relating to property and finance, so do give us a call and speak to him and get expert advice free of charge over the airwaves this evening. So I'll hand you over to Kam Bhai, who'll do a bit of an introduction himself, and then maybe we can go into sort of our first question, which is it difficult to get buy-to-let mortgages, especially in the current climate?
Yes, current climate, very topical at the moment. A couple of days ago, Bank of England made a very serious announcement about buy-to-let lending, which is in fact saying, look, lending criteria has to be tightened up and affordability tests more stricter, and so the bank's already taken action to actually check income proof more closely on buy-to-let, restricting people with larger portfolios on how much they can lend. So this is an area which is changing constantly, and in particular now in the next few weeks, few months, there would be a lot of changes by the buy-to-let lenders. We've had a reasonably easy period last few years on buy-to-let in particular, where there hasn't been too many restrictions on income proving, affordability test, and as long as you had your minimum 20% or 25% deposit, it was plain sailing. But this is about to change in the next. So if anyone is interested, I seriously suggest that they go and see a broker, and that would help them to maybe overcome any difficulties that they may have in the foreseeable future.
Okay. I mean, would I be right in thinking that some of these changes are because of the budget, or are there other factors, other things going on in the property market?
There are other factors. I mean, buy-to-let has been overheating for the past few years, where the prices have been increasing, and the government obviously doesn't want another credit crunch or another bust, if you like. So they're trying to stabilize things. And the Bank of England has learned from previous events where there has been serious issues where the banks haven't been able to cope with the credit crunch and other issues. So they're trying to take measures to stabilize things, I guess, and that's why they're taking these actions. Yeah.
And does this apply across both private property and as well as commercial properties?
Yes. Commercial property, I don't believe it applies so much to commercial properties, because there are sort of limits on place with those, and but it's mainly for the buy-to-let sector, residential buy-to-let, where the market has been overheating, and where people have sort of been building up portfolios, and so this is where the first-time buyers really haven't had much chance in getting into the market. So yeah, I mean, there's changes on the taxation coming up, but this is a new thing which is really going to hit people, where if borrowing is being tightened up, obviously it would be difficult for people to leverage on their existing properties and buy more properties, and so there's things to look out for.
Okay, we're just waiting for a few callers to come through, and I'm sure that they will be very soon calling through, because as I said, this is expert advice that's available for free. Normally you'd have to go to a broker and pay for this kind of advice, so I want our readers to take full advantage of that. While we wait for the caller to come through, one of the things I was wondering is how much can someone borrow on a buy-to-let?
Buy-to-let is normally 25% deposit, so that's straightforward, and there are selective lenders that do 20%. but they're quite strict if they're lending you on 20% deposit basis. But generally speaking, 25%, and it's been quite straightforward, long as you had some minimum income, and if you didn't have many defaults, for instance, or CCJs, it was reasonably straightforward. But now there's going to be further tests done to ensure that you could afford, if interest rates went up, you know, your income level and so forth. So where people have been on very low income, been able to build up portfolios, thinking, hang on, if there is a crisis, if there is some issues a bit further down the line, they will not be able to afford to meet the mortgage payments. So this is where the government is sort of, you know, Bank of England and the government are taking measures to reduce that risk. Like,
okay, so they're trying to take a bit more of a responsible approach. Presumably they've been burnt in the past.
Absolutely, yes.
And now they're trying to preempt these things and take charge and take responsibility.
Absolutely, yes.
Okay. I mean, you mentioned about 20 to 25% interest, deposits. There may be viewers out there who actually would think, you know, with current property prices, and particularly in London being as high as they are, people may struggle to get that. So are there other ways, I mean, can they pay less than that? Are there other ways?
20% with some certain lenders, but usually it is 25%. Going back 7, 8, 10 years used to be 15%, but these days it's 25%. But what some people are doing is, if you're not able to do it on your own, you can team up with someone or a few friends, set up a company and get finance through that and then acquire it. So, and there's also some innovative ways at the moment, crowdfunding and all sorts of other ways. So if you're not able to do it on your own, there are other ways to look into it and you know, invest.
So would you say it's become easier to raise finance now with all these different avenues available to people?
It has been reasonably easy for investors, to be honest, but with these new changes coming in, I mean, we don't know how soon all these changes, but from what we can gather, the banks are already taking measures to reduce. But on the other hand, they also have targets for lending. So where, you know, they have to keep a balance where they do tighten things up and check, but they do also want to lend to meet their profitability, their lending requirements and everything else. So yeah, it's we'll wait to see what impact it has, but there will be some changes.
Okay. Okay. So again, I'm just going to remind our viewers that you guys are the most important people. This is an interactive show. So please do call through. The numbers are up on your screen, but you can also email us, and those details are up on screen, and get in touch, and we'll read your questions out on air or put you through to the studio if you call through. One of the things I was wondering, actually, because you mentioned about people getting together and maybe setting up some kind of company or something, can people then have multiple mortgages?
Yes, of course. I mean, you can have many mortgages as you want on Byte, as long as you have the deposit. I mean, individual banks will have restrictions. Say certain banks say, look, you're allowed to only have four mortgages with us, 3 mortgages with us, or up to £2 million with us, or £1 million. So each bank will have its cap for that individual person. But yeah, you could potentially have 50 mortgages, 60 whatever, you know. But with the new changes, there will be more. The banks will be looking at more closely if you're overexposed, if you have too much borrowing, and so you know there are changes in the way. But yes, of course, you can have multiple mortgages. That's how people build a portfolio where they leverage, they remortgage on one property, leverage on that, and go and buy more properties.
And they can do that as individuals and as companies.
Companies, yes.
Okay.
Yeah.
Okay. I mean, so what's the benefit of being in a company? Obviously, you have to share the profits, but are you also sharing the risk? And is that the reason why people do these?
I mean, yeah, you have all the limited liability criteria. You have, and some of the banks, where in the past haven't been lending to companies, is now they've opened up and they are lending to buy-to-let on limited companies, because government legislation is pushing people towards forming limited companies. So with limited companies, the government, I guess, assurance is that, look, if the rents are being declared through the companies, the profit and corporation tax being declared, whereas in the past it's possible where landlords haven't been entirely declaring all their income because there wasn't any system in checking, but now they are clamping down on things like this. And so they are pushing people. The government policy suggests that, you know, they want people to move towards limited company, and therefore the banks have opened up to limited companies. Say, okay, yeah, we're happy, as long, I mean, you don't have to have established company. I mean, you could set up a company today and go and buy a property tomorrow, as long as, I mean, you as a director are a person of substance, you don't have any defaults or CCJs yourself. And you provide personal guarantees that if the company is not able to meet the mortgage payments, you're personally responsible for this. So the banks have covered themselves quite well. And yeah, there are some various advantages of having properties in limited companies, and therefore, you know, as people need to look into this, you go and see your accountant or a broker, and they'll arrange this for you. Because of particularly with all the tax changes coming up in the next couple of years, it's it could make a huge difference with somebody with a portfolio under their personal name, because of the tax relief on interest and what have you. So yeah, it could be individuals need to look at the option of structuring it in limited companies, and it's not difficult at all, because instead of lending to you, they're just simply lending to the company, and you're the director of that company. You still own the property 100%, simply because you own the company 100%. And that's how it's done. I mean, if somebody wants to do it really on a massive scale, then you could set up companies offshore island and have, you know, but those things are a bit more complicated and there's costs involved. But on a basic level, you could set up, you know, a limited company or a few limited companies and have properties through each one.
You've answered actually my next question I had in my head was, as you were talking, is can people set up more than one company?
Of course, yeah, it's very normal to have more than one company acquiring property, because you don't want to put all your properties in one company. And this is why, particularly if you buy large properties, then you should maybe just have one company owning that property. It makes sense for future saleability, where you don't have to sell the property. So you sell the company, and the property goes with that company. It's more attractive for the buyer because there's savings on various stamp duty and other things. Yeah, so there's lots of, and you can set up a group PLC and then have subsidiary companies and more companies. There's lots of scope for doing things within companies. Yeah, and you can take share, like I said earlier, if you wanted to give your friend or a family member some shares, is quite easily done. They don't need to have the names and the property individual names on it. They can simply have shares in the company.
And what happens though if you want to transfer your share of the property to, say, a family member? You know, if it's an elderly couple, they might want to give it over to, you know, their children or something like that. And how does that work?
To transfer, I mean, there's no such thing as just transfer. I mean, yeah, you can transfer shares within companies, but to transfer a property, it's not. There isn't any such. It's a buy and sell. You have to. So if the grandparents want to transfer to the grand, they have to sell it to that particular grandson. But if it's within companies, you simply transfer the shares to the grandson. They own the shares or that property. So yeah, that's another advantage of having it in a limited company. It's quite easy to transfer. Whereas if it's the property under your name and you want to give it to someone, then they have to acquire that, purchase that from you, and there will be stamp duties and all the other costs that come with it. And as we're talking stamp duty, that's a big one that's going to change as from tomorrow. There's a surcharge of 3% on buy-to-lets. So yeah, we need to discuss that as well, don't we?
We definitely do. I think though we are about to go to a break, so I'll just quickly remind our viewers, please do call through. We are talking about property finance, but Cam is well versed in all aspects of property management and development. So if you have any other questions which are not related to finance but to do with property management and development, please do call through. The number's on your screen, and we're waiting to take your call. So call through and get some expert advice today. Thank you. And we'll see you very shortly after the break.